Alright, most traders are confused about one thing. Which candle do we mark and how do we know the higher time frame bias? So I'm gonna start from there today. First of all, thank you for everybody who watched the video yesterday and who liked, left comment, and overall subscribed. I was not expecting that video to do that good. It looks like there's a lot of demand on this subject. So a couple of things I'm gonna go over in this today's video is first of all, I'm gonna show you the trades that I took, the trades that I missed, how to pick your higher time frame bias, and how to mark your chart, and answer some of the question from yesterday's video. So without any further ado, let's get right into it. So first of all, the trades that I took today, they were kind of obvious, but at the same time, not really. So I'm gonna cut the. So that's what I see when I woke up today. So there's like a clear sign that we cannot go above this line because we are keep getting rejection of this line. And another indication that I have about us rejecting this line is this candle at 8 a.m. So what is the rule? The rule with this strategy is that you have to see two consecutive candles, either two green ones, two upward candles, and the two upward candles, the body. This was a like big confusion that I saw people didn't understand from previous video. They kept asking like what what are the details in it. So it's pretty simple. The second candle, the body of the second candle has to close above the wick of the previous candle. So I'm gonna repeat that one more time. The body of the second candle, if we are going up, it has to close above this previous wick. And I made my cursor and my background darker, and I made my color brighter, so hopefully people can see it better in this video. So that was one of the indication that I feel like we're gonna go short today because I kept saying the same rejection. When you see the same rejection around the same levels, it should tell you something. Same goes with the support when we're about to reject certain area. So keep getting rejected, keep rejecting, and in this area right before the second candle, so I mark my top and then I close this. So I'm waiting for this candle to close above. Of course, this candle didn't close above it. And then I wait for the second candle, see what happens in the second one. And the second one goes up, it opens up. Of course, 9:30 opens up, goes up, and look, again, it closes below this previous candle. So now we're clearly in the downtrend because this candle fell to close above it, the body closed, and this one also closed below it. So now when I saw that, it was around 10 a.m. and I had to go to work. So first of all, I was in a rush. Second, I chased the trades. The strategy still worked today, but I lost because I missed the entry and I chased, and of course the price hit my stop loss and I lost, and I just had to go to work and I didn't trade for the rest of the day. But I'll show you how that happened. So I usually mark this last one. Let's make it red because we're going down, and then let's make that one red as well. And what I like about the 9 or 10 a.m. candles is usually it gives you a little bit higher clue of like where the price is going. Sometimes you can go to 4 hour because right after the 9 a.m. candle closes, the 10 a.m. starts. That's when this 4 hour candle closes. So it kind of can give you a better clear indication of where the price could possibly go to, and it could be in this line because we came here rejected, we came here rejected, rejection, and this one failed to close above it, this one closed above it, but the next one it failed to do so, and of course it failed to do so. Even though we are on a uptrend on the higher time frame on the 4 hours and on the daily, but we're still due to some correction. So that's like one thing you can do. I saw a lot of comments that they were confused on the bias or the where to market. So sometimes if the hourly is not clear, you can go to 4 hour or the daily to mark your chart. If you can see, I have this blue line here that I put DI, that's for daily indication when we broke above it. The purple line is for weekly, and I have one orange one for the monthly. So I kind of know where the price is going to break, retrace, and then continues. So let me just go here. Oops, that is not what I meant to do. Let's say we are here. So I'm gonna do a quick breakdown again. Let's say the price is going up, and then we retrace, and the price breaks above this line. The price always comes back to this area. Just make that dark. So the price always come and retest this area. It does that on the daily, it does that on 4 hour, it does that on 1 hour, it does that on 1 minute. Because time is fractal. And the way you can pair these, the best way to do it, if depends on what time frame you like to trade. So with the daily, you want to pair it with 15 minutes. With the 4 hour, you want to pair it with 5 minutes. The 1 hour, you want to pair it with 1 minute. And the downtrend is also, it's pretty simple. We're in a downtrend going up, down, down, and then we're going to come back to visit in this area. Just like that, we come down to visit this area. And then we don't take the trade when we hit this area. We do not take that trade. We take the trade whenever we see the price reject this level and close back above this line, and we buy. Stop loss goes here. Sorry, stop loss goes here. Take profit goes somewhere around here. Same thing if we're on the downtrend. We don't buy here. We buy whenever the price is start to reject and go down, and we enter here. We target here, and then we put our stop loss right there. That's it. Pretty simple. So let me go over today's trade again. Alright, so let me just go back to 1 hour. And then the way you mark your candles is you mark the one that we closed, the first one and the most recent one, if it's a big candle like this one. And I know there is no 2 consecutive candles. The reason why I'm still picking this as the area of interest, or as the point of interest, it's because again we did not close above this, and we did not close above this, so we rejected this previous wick, and we rejected this area multiple times. In this case alone, you don't have to wait for the second consecutive candle. You can if you want to. I'm sure the price gave you another opportunity, but I don't want to be on the chart all day. So let me go down to 1 minute. So the price came down to 1 minute. So let's see where we at. So now it's about to be 10 a.m. So we are clearly rejecting, going up. Yep, rejecting, going up, trading, going up. And let's see if we get another entry. Yep, so right there. So the price closed above the line. The price closed above the line. When we close below it, if you get a huge wick like this, if it's like over 50 ticks or something, and the price gives you this very like a clean flow, you can always set a limit order around the same line, or just wait for it to come and touch it again. And let's say you sell here, you put your stop loss right here. I believe the trade that I took was, this is the trade I think I took. I took this trade, I put my stop loss right here, and I put my take profit right here. This wasn't a good trade because I knew I was taking it first of all before the candle closed, and second, I knew the price were probably gonna come and touch this line again, but I didn't care. I was in a rush and I just wanted to be done with it, get in and get out. I wasn't patient, plus I had to rush to work. I had a client coming in early, so that was the trade that I missed. So let's say we're in this trade, stop loss is right here, our take profit, we should have some sort of clear indication. Hey, let's see, there it is. So let's assume we want to target this. Another thing, like when you see these stacked relatively close to one another swing lows, when we're on this strong downtrend, the price loves to come take all of these. This is called like a low resistant liquidity. This is a high resistant liquidity. But if we come take all of these within an hour or two, the price always take out this and also goes back to the previous daily indication. So, and then once you're in this trade, again, same thing. Your first take profit is here. Second one is probably here. And let's see what happens. So there it is. So that was a perfect example of the price giving you another chance. Because sometimes we close below it, come back, grab more liquidity, and go down. But look what the price is doing though. That's why you don't want to get discouraged. We constantly keep getting rejection from the same area. I'm glad it actually happens. So let's say you lost that trade, 77 ticks on 3 contract. Then when the price closes it below it again, let's say, boom, it just came, ticked you out. That's why I like to leave my stop loss a little bit above it. I didn't do it on this one, but let's assume you did it. And then price closes below it again. Then you go again, especially when you see the rejection around the same level. It's very clear rejection from the same level. Then you go again. And this time around, give it a little bit more room. You target the same areas. Let's target that. Let's take a trade off. Oops. Let's take to here, and then we're gonna let the rest run. So let's see what happens. Our first profit take it, and then you move your stop loss immediately to the most swing high. Same here, when we form another swing high, you do the same thing. Another swing high, another swing high. Let's see. Another swing high, another one, there it is, and we are done with that trade. So yeah. So in this trade, you could have entered here, stop above this, you would have been fine. Let's say you got into this one. Oops. You into this one, put your stop loss, boom. You just got wicked out. That's okay. There. So 3 opportunities. One was premature. You shouldn't have taken it. The second one was good. You got wicked out. If you would have given it more room, you would have been fine. And then the last one was the best opportunity. Usually price gives you 1 if the price is very aggressive, maybe 2 opportunities, but it's very rare to see 3 opportunities. But today price gave you 3 opportunities that you could have taken. And don't get into trade prematurely like I did, and I lost the trade. And let's see, let's go back to 1 hour. Let's get rid of these, and let's go to the gold example of today's trade. So let's see where we at. Daily, we can kind of see the similar things. Rejection. Go back to 4 hour. Let's say you don't see any of it. Oh, let me show you an example of like yesterday's trade, because somebody was asking, hey, what if we get like, what if it doesn't work? Like somebody was asking like about the second entry. I think this is a good example of like second entry, because I was watching this one yesterday, and let's see, boom, let's see, boom. So let's see, how was this one? Come on. So there was one, because we bounce from here, bounce from here. So boom. So there we go. So the price gave us a 2 consecutive close above it. So we put the first one here, second one somewhere around here, and then we go back to 1 hour. I mean the 1 minute. Let's see. So yeah, price came down here. We closed below it, and then closed above it again. You can enter here. Stop loss goes down here. Take profit is here. Let's see if we're gonna hit it. So when you're that deep, every time you're over 50% on your like about 50% or 2/3 of your way into your target, you kind of want to move your break even, move your stop loss to the break even. But for the sake of it being only 89 ticks, I'm just gonna let it have breathing room. Even if you want to leave it at the breathing room, you still want to like move your stop loss to like the most recent swing low before we made the big jump. So because sometimes the price touches it again and it hits the target. Sorry if I sound a little bit weird. I had a long day. I've been working all day. I just wanted to make this quick video before I go to sleep. So because there was a lot of questions on the previous video. Let's see. we were taken out of that trade. Let's see if the price is gonna give us another another shot. What time is it? 21. There it is. Close above it again. So, and then I don't just sit on the trading chart. I just set alarm and I walk away. So I saw this alarm last night, but I couldn't take it because I was at a friend's house. So you just take this. You put your stop loss below this most recent swing low to take profit here. And let's see what happens. And we were taken out. And let's go back. So we got taken out. So we go down one. Take profit around here. Stop loss around this one. And of course we know this one hit. There it is. So the price always hits the target. Whenever you have two consecutive body close candle on the hourly 4 hours, daily, doesn't matter. The price always likes to go hit that level once or twice. Even if you fell one time, this one should have been a break even. This one is just, it's Asian Open, so sometimes it happens. Even on this one, since if you see the price being a little bit choppy and get close above it a little bit choppy, what I would do personally, I would set a limit order on the most recent fair value gap. Let's say there's a gap here. I would set a limit order halfway through it or at the bottom of it. Let's say in this case I would have put it halfway through it, and I would have put it on the most recent swing low, which is here, and then I would target there. So it would have given me a better risk to reward ratio entering here than over here. That's like a little detail. As you start backtesting it, as you start trading it more and more, you start adding your own discretion on whether if you want to market order it or if you want to limit order it. And then even same thing here. Let's say the price made a huge move upwards and created this fair value gap. You can do the same thing. You can just put your limit order at the beginning of this fair value gap and put your stop loss at the bottom of this fair value gap. Because if we're bullish, the price shouldn't come all the way down through this fair value gap. It should just come and touch it and continue. And in this case, it continued it. See, even in a little bit choppy price condition, it still works. I wouldn't trade this, even though I got the alarm, I saw it, but since I saw the choppiness, I didn't take it. So that's pretty much it. Go to 4 hours. Let me leave this. And today's trade on gold was very similar to Nasdaq, but it was a little bit cleaner because I went to my 4 hour, I marked my 4 hour indication, correction, continuation, and let's say You get up, you wake up, and this is what you see when you wake up. You wake up around 7 8 a.m. This is what you see. We had our indication, we had our correction last night. We went above it, took the liquidity, then went down. We are trying to go above it again, even though we have two consecutive green candles. But look closely, pay attention. So if you zoom in, you draw your handy dandy trend line, look what happened. The the candle never closed above the wick, so the wick did not close through it. Like, that's the biggest thing I feel like people didn't understand. The second candle has to close above it, because this would be a risky trade anyway, because we're going against the overall trend of the market, because we broke through it, correction, continuation, and market is giving you a second opportunity to get in before the market opens. So that should be your ding ding ding, that should be your sign. But we still don't short the market right away, even though we have a 4-hour and hourly going again in our direction. We wait, and let's see. So this candle closes. See, that line did not break through. This did not break through. This did not break through. This 4-hour did not break through. It simply gave you another opportunity. But now it's more clear that where we're going. So you have your higher time frame bias. So this is what we did. Boom, boom, and then we went limit like this, I would say. And the price gave you another opportunity. Now we're gonna. So now we're gonna continue. So the price is right here. The price gives you opportunity in here, and the price most likely going to give you opportunity in here. So now you draw your line. We close through this one. Nope, wrong one. Turn this one red. There we go. This video is getting very long. How long are we? Ooh, 27 minutes. So I need to go to sleep. So you set your alarm on this one, and you set your alarm on this one. You go down to 1 minute. There we go. This alarm went off, this alarm went off. We took this line. We have to close above it. That one kinda counts as a close above. And then we went down. So we know our higher time frame bias, we know our high time frame direction, we know our on the hourly we couldn't close above this. So we had our indication going down. This is indication. We had our correction. Now this is the continuation. So now let's sell 3 of them. Put your stop loss up. I'm gonna be a little bit generous. So if this is not quite clear, you put your stop loss above the most recent swing high on the other side. Then you put your take profit. Let's say, let's go here. That's the most recent swing. You can target this daily indication if you want, but it's a little bit more risky. So you want your take profit here, and then another take profit here. There it is. So let's see if we're good on the first round, or we have to do it again. Oh, they were not good. So just like that, we only lost a little bit. We didn't lose a lot. So we just have to wait for it to come back again. There it is. Came and touched again, went above it. Let's see. There it is. Close below it again. You do the same thing. Stop loss goes here. And the final take profit goes at the daily indication. And this one works out beautifully. Bam. Just like that. Hopefully that worked out. Hopefully I was able to answer some of the questions from the previous videos. Previous videos comments. Let's see, insane homepage pull. Thanks for live. Okay. I think I mentioned most of the questions from the previous ones, but I'm going to make more video, go over everything. That's what you saw. You saw the real trading result of it. So about 75% win rate. And there you have it. That's why those tight stop loss helps you out a lot, because the risk reward ratio is so good that those tight stop losses doesn't matter as much. And it's this in today's gold, same thing. Remember how I said the market usually give you one or maybe two opportunities to have an entry. They give you one opportunity here, boom, and they give you another opportunity here. There it is. So yeah, hopefully that helped. Leave your question down in the comment, like and subscribe. See you guys in the next one.